Money FM 89.3. Best of breakfast. Companies to watch.
All right, lots to watch out for, and on the table is a stock that is going to be interesting because of its dividend yield. And to help us shed some light on it, we've got Dan Koh. Good morning, Dan.
Good morning, Ryan. How was your weekend?
Pretty good, because it was right after the Valentine's Day
Romantic?
festivities.
Yeah.
I guess we had a pretty romantic weekend of sorts. How was yours?
Mine was great. I had a nice picnic at night for Valentine's. But I did enjoy myself very much. Very unconventional. I refused to spend or justify $500 on a dinner.
But the effort counts, and I'm sure it's going to pay
It's the
dividends
heart
for
that counts.
you.
Oh, yes, Ryan. Very smooth. Okay, now we're turning to a company that I'm sure not a lot of us have heard before. Erie Indemnity Company. Have you heard of this one before, right?
Just this morning. How me spell it?
ERIEINDEMNITY Company.
All right.
So that was founded back in 1925. It just turned 100 this year and headquartered in Erie, Pennsylvania. And it is the leading provider of management and administrative services for the Erie Insurance Exchange. So it has a market cap of about $18.7 billion, and it supports a network of independent agents offering a comprehensive range of insurance products, including auto, home, business, and life coverage. Now, it's worth mentioning that the stock is currently trading at about $388.95. That's down about 5% year to date. And the reason why I've brought it up today, it's because, as much as it's lagged behind the SPDR S&P Insurance ETF and, the broader ETF fund, which has gained about 20.7% over the past 52 weeks, the company has still been posting relatively good performance in its latest earnings. Its third quarter earnings, which was released on October 31st, posted about revenue of $999 million during the quarter, which was 16% more than the same quarter the previous year. I think that's quite fabulous numbers that we're seeing, don't you think, Ryan?
Yeah, but you mentioned that it's lagging behind the ETF, which really raises question marks why we should be looking at this more closely. What's really driving your, I suppose, optimism around it?
So the thing is this, right? If we look closely at the numbers, we're seeing higher management fee revenues, which is increased to a large degree, rising 19% year over year. We're also seeing an increase in its dividend to $1.37, which is about 7.1% higher than last year's payment from the same period of $1.27. Now, on the topic of dividend, it was also recently announced that it will be one of the few additions to the S&P 500 Dividend Aristocrats. And in case you don't know what that is, that's an index that follows companies with a history of raising their dividends for at least 25 consecutive years and has announced its annual rebalancing. So, effective at the market close on January 31st of 2025, Erie Indemnity Company, Eversource Energy, as well as FactSet Research Systems were all added to the index, and that takes the total number of member stocks to 69.
All right. So to make it on this list, the company must possess a profitable business model with a valuable brand. It must be global competitive advantage and the ability to withstand recession. So to make the list is already an achievement.
Exactly. It's a huge achievement for them. In fact, they're not a huge insurance company, Ryan, in relation to its peers. So it doesn't really have major skill advantages over its competitors. But compared to many other insurance companies and financial corporations, it was relatively stable during the Great Recession, which is also a positive from risk perspective. Now, aside from just the increase in dividend yield and consistent payout, we're also seeing some good capital appreciation with the stock. Just its one-year performance, it's up 8.1%, and over a 5-year period, it's up 137.8%. So quite a significant jump from the stock here. So while it has successfully grown its earnings per share consistently over history, it's also worth noting that as of now, it carries a high valuation, which probably explains why the stock is lagging a little bit as compared to the ETF. So that being said, though, I'm going to give the verdict of hot for this stock. What about yourself, Ryan?
Yeah, I am curious about it. I'll give it warm.
Oh, warm one. Okay. That's new. I'll see whether I can include that into the topic. Well, that being said, as of the 17th of February, we've got consensus rating giving it a relatively optimistic outlook, with Yahoo and Barron's at a buy rating and TipRanks giving it a warm or neutral rating. And that pretty much wraps it up for today's analysis. Erie Indemnity Company. Now, Ryan, why do insurance salespeople make good spouses?
What? Why would they make good spouses?
Because they are premium lovers.
Not bad then.
And that's all we have for Erie Indemnity Company.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.